Well, first and foremost, welcome everybody to today's webinar event. I am your host, Sean Kozak. I am the founder of NeuroStreet's Trading Academy, and I'm really excited about the next 2 days. One of the biggest, most used products in our company and one of the most widely adopted concepts in our industry is using order flow and volume. And the best part about these next 2 days is we've designed an event that breaks down basically order flow in day 1 and volume in day 2. And the purpose for this is because there's just literally just too much great information and concepts around strategies and trade execution ideas, and just there's so much great things to discuss that there's no way we can put it all into one day, right? So what we're going to do today is we're going to basically break down how to profit from order flow. And if at any time you have questions, please type them in the chat box. As always, we are recording these events. And if you can't stay throughout the entire webinar, not to worry. We are going to get you guys all the details and we'll send it out via email. You definitely want to make sure that you check your emails for day 2, because tomorrow we're going to be doing day 2, which is volume. And both today and tomorrow, we're going to be providing you promotional links to the proprietary print profiler software, which we're going to be using to demonstrate the next 2 days concepts. Okay. So before I go any further, I do need to cover a quick disclaimer as required by industry regulation. And while I've got the risk disclaimer up in here, can everybody in here tell me if you are using order flow? Just type a yes, or if you're interested, or if you're new, type a new if you're new to order flow and you're here to learn. If you're using order flow, type a yes. Basically, because there's a lot of things to do with order flow, and we got a lot of traders in here coming to learn this stuff, and I really think that it's important that you learn the right way and understand it, so that we don't get sucked into the mess of order flow in the wrong way, right? So first and foremost, I want to cover a breakdown of the highlights of today's discussions. We're going to go behind the scenes. We're going to talk about the order flow process. I want to talk about tape aggression and delta. I want to explain the trade signals that we've created, pulling data from the time and sales. The power of the algorithms is very important because we can't do that from a human perspective. And really where the meat of this discussion is going to really be beneficial, because it's one thing to learn about the order flow concepts, right? It's very important to learn order flow concepts. We need to learn the basics before we can ever learn how to use the information. But we got to put the picture together, right? Like we got to bring the information together. We got to integrate the details of order flow and then put it into context. Yes. So what I decided to do over the last couple of weeks is build out some training material that's going to help you understand the different entries, okay? The different entries and the different confirmation tools that we can use for putting order flow into context, because there's many different ways to use order flow for confirmation or for strategies, okay? So we're going to look at some markets, mainly the S&P and the euro dollar, just for demonstration purposes. And then we're going to give you guys the breakdown, and we're going to give you guys an opportunity to get using the tools if you find value in it, and then also register for part 2. Okay. So if you don't know who I am, my name is Sean Kozak. I am the founder of NeuroStreet. I'm very blessed to have such a wide audience of great traders. Been doing this a long time. Love it. It's my passion. I don't know what I would do without being a part of Wall Street. It's all I do. It's all I just love the business, love the industry, right? More importantly, I love seeing traders succeed. I think the biggest thing that I really took away the other day was I got an email from a trader. He says, Sean, I can't thank you enough. I've passed 2 funded combines. I'm working on my 3rd right now, so I'm going to be trading 3 funded accounts, right? And it was a guy that I worked with, and he was blowing out account after an account after an account before coming to us, and now he's trading 2 fully funded accounts for prop firms, right? Not even trading his own money. right? So I really love helping people. And the reason I spend so much time doing events every week is so that I can help educate you guys with things that I'm passionate about and also things that I've done a lot of work involved with, right? And so if you have any questions for me or my team, we're an email or a phone call away. We are both an educational provider at a school level, so we do teach a lot of trading strategies, and we have our trading rooms and our online membership site for education. But we're also a very large development company, and we do sell a lot of indicators to a lot of traders that are really just using our tools in the industry. So if you have any questions on that, we're here to help. Okay, give me a yes, we're ready to start, guys. We're going to kick things off. Drum roll, please. Bing, 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 bing. Everybody's ready. You got a coffee. No name on the slide. Sean Kozak is my name. Michael. Yeah, Sean Kozak is my name. You can check us out on the website too. All right, guys. All right, let's jump in here and let's talk about this. When I first got started as a trader, all I knew about was time charts. I was told by my instructors at one point that we use a 5-minute chart and a 15-minute chart and a 30-minute chart. And at that time, I was just so fascinated about trading, I didn't really know anything different, right? Fast forward 10 years, and if I would have known what is actually going on in the back end back then, I probably would not have taken the losses I did at that time. And I'd probably have a whole little bit of a perspective of the market, right? But the main question here is essentially what's going on inside the data. Now, there's a lot of different ways to assess trading: price action-based strategies, indicator-based strategies, order flow strategies, volume strategies. But it doesn't matter what you do or who you are or the style of trader that you are. Order flow was predominantly brought into the futures industry to look inside the volume data. Now, the key here is that most traders don't realize this, but we can actually use it for futures, Forex, and stocks if the software is designed in a specific way to accommodate those market classes. So if you're in here and you're saying, well, I'm a stock trader, or I'm a futures trader, or I'm a Forex trader, we've developed our algorithms to work on all of the asset classes. Because a lot of traders think that, you know, if I trade Forex or if I trade stocks, it's different than futures, when really it's not. It just depends on how we look at reading the data and how we, you know, how our tools are built to accommodate that. So the question is what's really going on behind the scenes, right? When prices go up, when prices go down, most people are just kind of waiting for something to happen. But in truth, there's a process that's taking place. There's actually a process that's taking place behind the scenes. And that's what Orderflow aims to do. It aims to help us go and uncover the information, okay? So what we're going to do here is we're going to talk about the inventory. Now, what the inventory is it's level 2. Now, a lot of people look at level 2 in a window, let's say on our platform, or, you know, looking at it from a perspective of, you know, just trying to look at the bid and ask on a scale where you have level 2 data. And a lot of people don't actually have level 2 subscribed on their data. I actually don't have it on my platform right now because I just switched data providers. But normally what you would have, let's say you have a level 2 window, right? And a level 2 window looks at, you know, level 2. Normally a level 2 window will have, you know, 10 levels deep of order flow coming in on the bid or the ask. And what this level 2 data is doing is and I'm just going to look at the ask and the bid. And this is, we're not talking about a candle now, we're actually talking about a market. And so let's just say this is the S&P right now, or let's just say this is the euro dollar, right? Doesn't matter, or maybe you want to look at Apple stock. It doesn't matter if it's any stock, any futures, any Forex, it doesn't matter. But the concept is still the same. You're going to have what we call a balancing act, right? We don't really know who's in control of the market until the order flow comes into the deck. And we call this depth of market. Depth of market, yeah, that's exactly what that is, Jacob. So this is like taking the dome, and we're going to talk about that in just a second. But the dome is another word for depth of market, okay? And what the dome does is the dome allows us to basically look at the information in the depth of market window. Well, a lot of traders are not comfortable looking at the market from that, and it's really a preference, but the inventory is still the same. This will still tell you the inventory. What we've done is we flipped it on its axis. We flipped it on its axis. This allows you to look at the inventory from a visual perspective. So if you're somebody that's interested in looking at level 2 or the depth of market, if you notice, if you don't subscribe to level 2, you only have one level deep inside the dome. But if you have level 2, you're going to see 10 levels deep above and below. And what's interesting is that this is the ask and this is the bid. So we're able to actually see all of the sellers and all of the buyers. Now, the concept of level 2 is that it's a balance. It's never a finite thing because inventory can shift. So what the problem with inventory is that we call this the intent. It's never confirmed. And there's iceberg orders and there's hidden orders and there's what we call spoofing. So what ends up happening is this can often be useful, but it's an art form, it's not a science. And the reason I say it like that is that let's say you have a bunch of orders and you got a bunch of orders placed above price or below, maybe their limit, etc. At any time you can pull those orders and they can be pulled out of the market. At any time someone can change their decision to put an order in or above or below price, and that will change the inventory. Okay, so level 2 is a preference, but it's the beginning stages of what we consider the order flow process, because once level 2 becomes executed, that's a different story now. It is no longer inventory. It is what we call, it is called confirmed order flow. And so when that happens, this is a breakdown of the process. So level 1 level 2 or depth of market is here. Now you'll notice that I only have one letter in here, or one number. That's because that is only level 1 data. If I had level 2 data, I would have 9 more numbers sitting here above me, and I would have 9 more numbers sitting here below me, okay? And the concept of this is that tells me depth of market. That tells me all the sellers up here at the asking prices and all the buyers down here at the bidding prices. And what ends up happening is when the inside bid and offer get executed like this, inside here on the bid and the ask, buyers and sellers exchange the order flow, and then it moves over here into the time and sales. Now the time and sales is like a receipt. It acts like a receipt. When you go to a grocery store, when you go to a clothing store and you buy a shirt for Christmas, they give you a receipt. That receipt tells you the store, the address, the time you came to the store, the price you paid for the shirt, whatever else they put on the receipt, but it is a proof of purchase. So really time and sales we consider proof of purchase or sale. It's called POPs, proof of purchase or sale. And what that means is that basically is like a record that the institution, the market makers, the time and sales, the liquidity book, the exchange keeps a record of all of the order flow that gets basically archived in the market. But what also becomes more important is that a lot of traders will try to read the tape. A lot of traders will try to understand what that order flow is meaning. Now, if you're like me, I don't need to be Einstein. How many of you here already find trading to be difficult enough? We're not here to try to complicate things. Can you guys just give me an amen to that? How many of you guys can agree that trading has so much difficulty already, we don't really need to make things more difficult? Okay, so the purpose for us designing order flow software was not to just be somebody that has a great order flow software suite. The purpose is that I didn't want to have to read the depth of market, and I definitely didn't want to have to become a tape reader. Not that I couldn't learn it, not that I didn't think it was needed. I just personally just didn't feel that it was really good to do so at my skill level, and I felt that I was still an advanced trader. But I just felt there was already so much to do. I just didn't want to have to add that to the plate. So what we did was we created a tool set that converts the depth of market from the time and sales and puts it into your chart. Now, this is not the only tool set that is available for Orderflow. In fact, there's many versions of Orderflow software. In fact, even some of the platforms have basic versions of Orderflow charts available. And the reason for that is that most of the platforms and the brokerages are trying to catch up to the retail vendors. Like companies like us and a lot of other vendors that use Orderflow tools, we're a step ahead of, say, the bigger ships because it takes a lot longer for them to move their development queue around. So Orderflow is not a new concept, but what traders do with Orderflow is what makes it different. Now, the reason I'm saying it like this is because our job is to take this information that goes from here and move it to here. And what we've done on this chart is what makes the next day or two very, very exciting for me to teach you this stuff, because we've developed many different proprietary things that are available in our tool set that are not available on the platforms and that are not available in other environments with other Orderflow tool sets. And the reason for that, and I'll just give you a little bit of background behind the development of this tool, okay, was when I was first building this with our development team. One of the things that I said was I don't want 5 indicators to do one thing. I don't want to have a whole bunch of different tools on my chart to do the same thing as I can have with one. And so what we did was we studied all of the different order flow processes out there, all of the different ways in which order flow is being used by different platforms and different companies. And I wanted to build a tool that became an all-inclusive solution so that you have one tool to rule them all. And that's what I want to teach you today. I want to teach you how we've built this in a way that allows us to be able to explain the order flow process. Now, the reason this is neat is because we don't need this anymore. We don't need this anymore. My job is to teach you, okay, how to understand this information. And what I like to do is I like to keep it super simple, because order flow is already an overwhelming process. Traders start seeing the numbers, They start seeing all the stuff and the colors and the flipping and the flopping. And I don't know about you guys, but my brain gets a little sore sometimes, right? So what I'm going to do is I'm going to simplify it down. So if you're taking notes, take some notes. I've got some important stuff to share with you, and then you can go back and watch the recording with all of that. So when you look at a candle, okay, when you look at a candle, what we do is we need to understand the bars in and of itself, okay? And when you have the bars, every single candle has a bar, you got a wick, and you got a wick, okay? Well, let's just kind of splice that candle down into 2, okay? And all of the numbers on the right side are the ask, and all of the numbers on the left side are the bid. Isn't that the same as what I just talked about on the previous slide with the depth of market, where you've got 10 levels deep above and below price? We do that. We put the depth of market into the candle, okay? So what we do is we put the depth of market into the candle, and what we do is we have numbers on every side of the bar, right? We have numbers on every side of the bar. Well, those numbers are compared diagonally, okay? Because that's how the market works in the depth of market. You have to have the 124 being compared against the 16. You need to have the 34 being compared against the 2. You need to have the 58 compared against the 6, because the depth of market goes like this, okay? Now, why would this be important? That's the most important thing. It's important because the whole purpose of the depth of market in the first place is to understand the strength relationship between the balance between buyers and sellers. In fact, that's all the depth of market's designed to do, is that when you have the bid and you have the ask, the question is, who's winning? Who is winning at any given time? the buyers. So the imbalance in the print, the imbalance in, actually no, Jacob. And that's what I'm going to share with you today. That's the biggest misconception of Delta. Give me a second. We're going to talk about that. Write that down, Jacob. Bring it up if I forget and I go off topic. We're going to talk about Delta, and we're going to talk about how it can be the biggest misconception in this industry. And I'll share with you why. Okay, we're going to talk about that when we get into the order flow confirmation stuff towards the later part of the presentation. So when we talk about the bid-ask relationship, at any given time in the market, right, the buyers are trying to push up and the sellers are trying to push down. And when the market's at equilibrium, the price ain't moving. The only time price can go up and down is when there's an imbalance in buyers and sellers, right? If there's more buyers and sellers, price should rise. If there's more sellers and buyers, price should drop. And what we do is really, that's, in my experience, the reason I don't like to call it imbalance is I like to call it aggression. It's just another word for imbalance, but aggression is who's being more aggressive, right? Who's winning who's winning the battle? Like who's aggressively controlling price? Because that's what we're doing. We're trying to figure out who's winning. So what we do here is we have two types of ways to do this. We can color the numbers, but one of the things that I find is that a lot of times the numbers can be overwhelming for traders to learn, right? A lot of people are visual learners. I know I am. I'm a visual learner, and I find numbers can be overwhelming sometimes, but I can remember colors and I can remember patterns. So what I like to do is I like to, choose between displaying colored numbers or dots on the charts. And what we're doing here is we're just coloring when the buyers or the sellers are becoming more powerful. So in this candle over here, he says ask aggression. The ask aggression is when we put highlighted bars or highlighted numbers or highlighted dots, okay? Or excuse me, bid aggression is over here and ask aggression over here. When the ask aggression is happening, it's when buyers are aggressively going to the asking price. So when you have an ask aggression dot on your chart or sections like this, right over here, this is ask aggression. This would be a little bit of ask aggression. This is spotty ask aggression, right? The purpose of this is to understand that the buyers are aggressively attacking the asking price, which means that's normally going to be market order execution. When you have aggressive orders getting hit like that at the ask, that's market orders. They're going to the asking price. They're like, yep, boom, 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 let's go in, let's get in, okay? And when you have the bid aggression, okay, that's normally the sellers going to the bidding price. It's kind of like they're slamming it down and I'm going to just get in at market. Now, think about this. Who's really entering at market and who's controlling the market? Like, if you think about what's really going on here, if everybody in this a webinar, and I don't mean this in any disrespectful way, maybe some of you are very, very highly liquidated with lots of wealth, but if you were to take the masses and add them all up and put all of our bank accounts into one pooled fund, I can assure you that we probably still wouldn't be able to move the market. So who do you think is aggressively attacking the bid or the ask? The only people that can actually move price, the ones that have the big bank pockets. So all we're really doing is we're just trying to get an understanding of them. Because I always like to kind of, do the analogy of when we come up and we get up in the morning and we try to go into our office and trade, whose backyard are we stepping into? Really? Whose backyard are we stepping into? Sure as heck ain't going to my cousin Larry's, right? We're going into the institutional environment. It's a big bank business. And so when we step into that, this type of a tool will help us understand what they're doing. Now, I haven't talked to you about how to use this for trading. I want you to understand why this would be important. Now, this is also just another way to identify supply and demand in the market. Now, there's many ways to measure support and resistance, and there's actually several different ways to quantify supply and demand, okay? Yeah, Michael says the cartel. Yeah, probably. They've got some cash, right? But all jokes aside, what this is telling us is it's telling us that there is supply and demand being created with evidence. So when I say evidence, remember this, that we're taking the information from the time in sales and we're putting it on the chart. So the only way we would ever know that that is happening is if we had a receipt. So whenever this takes place on a candle like that, okay, and we see that, we call that, you know, stacked aggression or stacked imbalances or stacked environments of order flow like this. Whenever we see that, what that's telling us, or whenever we see stuff like this, what it's telling us is that inside the time in sales, there was a receipt that we're able to quantify large amounts of orders being executed on the bid or the ask, and here's the proof. That's really what this means. It means that inside of the depth of market and inside of the time in sales, we were able to record that these big banks are flooding the market with market orders at that price level. That's what aggression is. In fact, aggression, Michael says, is there any way to see large blocks? Yes. At the end of today, we're going to be talking about block orders. Absolutely. Big time. And we have new features for that, which is proprietary to us. Like I said, we've developed algorithms to do things that others can't. Okay. And so trust me when I say this, you're in for a treat. Okay. So this is receipt, proof of supply, proof of demand. Okay. And that's really what this is intended to. Now I see a lot of questions coming in. I'm not going to answer them right out the gates. I will after. Okay. And what we'll do is we'll go into this. Now, when we talk about the delta, I'm gonna turn heads here for a bit, because here's the thing. If delta worked the way that it's supposed to, it would be the holy grail of the market. It's not. In fact, you can see price go up on negative delta. You can see price go down on positive delta. In fact, you can see that delta is an incorrect method for assessing bias, and I'll tell you why. Because you do not know if the orders are getting hit at limit or at market, and I'm going to explain what that means. So let's say you've got a level of resistance and a level of support. Okay. The delta that's positive or negative is what we consider the net relationship to all the bid and the ask on the bar. Now the problem with delta, and this is not just our delta, all delta, okay, is that if prices are coming up to this area, okay, and I've got a candle up here, I could have orders being executed at market and at limit up here, and they both contribute to the delta reading. And the problem with that is that any orders being hit at limit, okay, are going to appear on the wrong side of the bar, because as prices are going up, they're going to appear on the wrong price in the dome. They're going to be sucked into the dome, the depth of market, and it's going to assume that it was, let's say, an imbalance, but it's really not. It's an opposing order. And this is a very difficult process to talk about. So I've illustrated some images at the end of today's webinar, which is why you cannot rely just on delta, because delta will lie to you at the wrong locations, because you never know if behind the scenes it was maybe really large passive orders waiting at the limit that is tricking the dome and the depth of market. And the reason it can be tricked is because as prices trade through, it can actually be lifting the bid or lifting the ask. And I know that's a very difficult concept to understand, but let me just tell you this. If you think that delta is the answer, it is not. It is truly not. It can help to some degree, but if it was the answer, then it would be the holy grail. Yeah, delta's positive, market should be going up, right? Delta's negative, market should be going down. That doesn't always happen. Okay. So delta is useful in giving us a picture of the net relationship to the orders, but it's only there as kind of a sum relationship. It just tells us the sum of the data. And we never really want to just rely on the sum, because the sum does not tell us the intent. Does everybody understand that? Give me a yes. Now I know that's a little bit more advanced. We're going to get into that towards the end of the presentation. Just write this down. Delta is not the Holy Grail. Yeah, Richards, the market makers move the market when they take the opposing side of the trade. Well, I have some images that will will explain this, and we'll talk about that. Okay. So let's talk about algorithms. It's kind of the battle between man versus machine. We as retail traders are really at an advantage, because we can make human decisions, but at the same time we're at a disadvantage to computer algorithms. Now I want to write something down here, and hopefully you guys will kind of listen to this, because I do believe this is important. Is when you ultimately think about an algorithm, or high frequency traders, or when you think about algo robots or HFTs, or any of the nature of, like they say, the algos are out to get you. I need to put things into context so that you understand what's actually happening. What is the job of a market maker? What is the job of a market maker? Okay, to create liquidity. A market maker is in the business of taking the opposing side of your trade. They make the market. We need to be able to trade against a market maker. Okay, so a market maker basically provides liquidity. So they take the risk. So if they take the risk of holding that liquidity, think about this. A market maker needs to hold the liquidity for you to be able to buy or sell a market. So they're at risk of holding the asset. So not only do they have to profit from the trade, but they need to profit from the spread. And the spread is like one tick difference on many situations. Sometimes one tick, sometimes two ticks. That's when algos are involved. Algorithms are involved in the market making process at an HFT level, at a fiber optics level, at a level in which they provide the liquidity to us. An algorithm is not participating in a 15-tick move. Maybe robotic trading systems built by retail traders that work for a prop firm maybe do that. That's not an algo. That's a retail trader turning on his robot. An algo is a market maker that is making a cent profit spread off 6 billion transactions in a day. Yes? So we actually need the algos to do our job. So when traders say, well, the algos, and they're out for my stops, and all, that is an incorrect belief system that hopefully I can help reshape the product offering around what's going on here, is that we actually need algos, or we wouldn't have a financial market to work in. Does everybody get that? So what I want to do is I want to talk about how we leverage the power of computers to do things that we can't do. Okay. The only time a market maker is going after your stop is if it's above average order flow. If you have a whole bunch of like, let's say you have a level here, okay, and you got a whole bunch of orders in here, and you got some random hot shot coming in with maybe 20 times the size of all these other orders, you know what they're going to do? They're going to drive price down, hit that stop, and then they're going to rip the market. If you are somebody that is literally just in the mix of everything, they're not coming for you. Your stop was just too tight based off market volatility. The only way they come to get your stop is if your stops are above the average size in the book of depth of market at that time. They'll come see you. They'll see it. And the only way to know that is if you're able to go into the level 2 and see where everybody else's orders are, which you can't. You can do that with depth of market. You can do that with the inventory, actually, which is actually one way to understand where the bigger orders are sitting. So that's very important, which we'll talk about, okay? But I want you to not punish yourself if your stops are getting hit, because they're not coming for your stop unless you're trading with such big size that they see you all the time, okay? So let's kind of talk a little bit about trade signals for a second. The reason I wanted to use the term algorithm is because the reason I want to use the term algorithm is because algorithms are a way for us to leverage computers to do things we can't. So we've built a signal suite and we've added 2 signals. So a lot of you may or may not know that we've added 2 very, very significant signals into our software. So if you are a customer and you are using the Print Profiler suite, you're in for a treat if you have not updated or you don't know this yet. But the 3 primaries are trap traders, delta divergence, and then a combined signal. The other 2, called big money print and block trades, are a statistical algorithm that we just recently built over the last 2 months. And what it's doing is that we're running a statistical comparison in the block and in the actual bid-ask relationship to identify absorption and to identify when the market is being absorbed in the liquidity and big money stepping in. Because it's not about aggression. Big money can step in at limit too, guys? And that's why delta can't be used. So big money can step in at limit, which will shift the delta differently. And therefore you need to see that as absorption, not as aggression. Because absorption can stop the market before aggression can step in. So if you're relying on, say, stacked imbalances or aggression, you're always relying on the market orders, which is the follow through. But if you're somebody that's trading reversals, big money print's your best friend. Big money print is your best friend in reversal trading. Aggression is your best friend in confirmation entries. We're going to talk about the 2. And block trades, I want to see if anybody gets this. And we're going to go into them and we're going to go into detail. But block trades, how many of you guys know the biggest problem with block trades? Can anybody tell me what is the #1 problem with block trades that everybody has? And the big thing here, while you guys are typing in, okay, I'm going to say this. The reason that we need this software to do this is you will not be able to do this yourself. So if you're somebody that is wanting to do this, it is physically impossible for you to read this as a human being. You would need to literally be iRobot. Will Smith. J-Dub says volume. Thomas says slippage. No. Block trades is that we do not know how to set the appropriate order blocks for each independent market, because every market is different. Above average block size trades will be different in the S&P than they will be on gold. So you can't rely on the same system settings. You need to do statistical tests on all your markets. I mean, if you're trying to rely on block orders, you say, oh, I'm putting 50 lots on S&P, 50 lots on crude. Well, it doesn't make sense because that's out of context for each market. And we fix that problem. So guys, I'm really excited here. We're going to go in here and we're going to start talking about some order flow signals, okay? So the first one about exhausted volume and exhausted order flow, okay? The thing here is that we take the data from the time and sales. This stuff is moving super, super fast. And what we want to do is we want to create trading signals for when the time and sales provides a mathematical opportunity for us to see this. Okay? So when you have a mathematical pattern that comes from the time and sales, we want to be able to tell the software on our price bars when that pattern is happening. So one of the patterns is we call exhausted order flow, is when prices go up and the order flow gets exhausted in the time and sales. A little arrow will say TS, which means trapped sellers, or excuse me, trapped short, which means trapped buyers. And basically all the buyers are getting trapped in that candle. Same thing down here. all the sellers are getting trapped in the lows of that candle. You notice down here, look, price went up on negative delta. That's why delta cannot be used as bias. So what we're doing here is we're looking at exhausted order flow, and we're looking for patterns in the print. We would not be able to see that. There is no way we would be able to count in this ticket 350, 349, 315, 274, 66. You would need a calculator, and you need to be laser fast to see that. Now, as a day trader and as a scalper, these can be really, really awesome trade signals, especially with directional markets. You get short at the close of the bar, you ride that down for a scalp. You get long at the close of the bar, you ride that up for a scalp. Why? Because these are reversal patterns in the market. Buyers and sellers are getting exhausted in the print. Okay? You time those at key levels of interest, and they can be very, very powerful. Let's talk about delta divergence. Prices are going up and down on rotating delta. So unlike momentum divergence, momentum and price going in opposite direction, what we're tracking here is we're tracking when price and delta go in opposite directions. It's when prices are making lower lows on positive order flow. How is that even possible? How can prices go lower on positive order flow? Like, how can you have the market drop on positive order flow? That's called divergence in the print, divergence in the tape. Okay, so what we do is we identify price direction and net order flow relationships. Okay, so that we can look at taking longs or shorts on the close of these bars where these signals happen. Now, what I like to do is I like to talk about when we bring them together, because now what we're doing is we're combining the exhausted volume and we're identifying delta divergence. These can be super, super powerful. And depending on the price bar or depending on the chart that you're looking at them on, okay, I like these types of strategies or these types of signals on, say, range or Renkos or any type of fixed bar types. If you're somebody that's a scalper, or if you're somebody that's basically, well, it depends, Richard. It depends on if you're looking at range charts, Renko charts, tick charts, anything that is a fixed brick sizes are really potent like this. Where these types of signals become a little bit different, and that's why we have the other types of signals, is let's say you're not using fixed range bars, Renkos, anything of that nature, range charts, that type of stuff. You would want to use maybe, say, some of the other types of signals, and we're going to talk about them in just a second, but it really just depends on the type of trader that you are, right? Either way, these are really wicked shorts or long opportunities when you have them, especially when you get support or resistance. If you have a level of resistance up here where the market comes in, or a level of support, and you see that happening, and you get the signal down here, this TDL or this TDS, which is what we call combined signals, this is a really powerful algorithm. This is going into the tape, and it's going into the receipt book, and it's saying that, okay, as the market went up, we are able to see that the volume is gone, and we're also rotating on diverging order flow. That's very potent information that you would not be able to see if you did not have a tool that could go into the tape and see that. Okay, so what I want to do is I want to talk about what I think to be, well, I'm just super excited about this because this is new. This has never been discussed before. And I'm going to go and show you examples on this stuff. I'm going to show you examples. We're going to go on the charts in a moment. But I want to talk about big money print, okay? So here's the thing about big money print. There is no other software out there that I've ever seen do this. And that's why I did it, because it takes a lot of work to understand the study behind it, okay? First of all, big money is a subjective data point, which means big money on the S&P is different than big money on crude oil. Big money on the Aussie dollar is different than big money on the pound dollar. It's different. It's different relationships of different markets. So you cannot rely on the same information from market to market. It's different. You cannot set order flow and block trade settings and all that stuff the same when they're not the same markets. They're different liquidity. One is thick and one is thin. If you put a 500 lot in the S&P, you don't even get noticed. You put a 500 lot in crude oil, and everybody around the world's going to come looking for you. Right? It's just the way the world is. So you can't create a tool set that can be used out of context. It's not accurate. So what I want to do is I want to talk about what we did. We built an algorithm that tracks every candle. Okay. We built an algorithm that tracks all of the ask size and all of the bid size. And what we do is we can set a look back period. So what we can do is we can set a look back period that we can choose the last 20 bars, the last 30 bars, the last 50 bars, whatever you choose. And then we can assign a multiplier that basically says, we take all of the ask data that is on, like, let's say I've got 4 candles here, right? And I got 4 bars, just like this. And what I'm doing is I'm saying I'm going to go inside all of the asking prices of here, all of the asking prices here, all of the asking prices here, and all the asking prices here. And I'm going to assign a 2.5 multiplier on it. Whenever big money steps in and it's 2.5 or greater times the average ask size on the bars, I need to know, because that's big money stepping in, because it's above average order flow. It's above average blocks. And this is not block trades. This is above average comparisons. Okay? Because what's big today will be different tomorrow. It's different traders. You can't keep the same setting. You can't, it has to be dynamic to the market. It is genius. Yeah. Well, the thing about time of day is it doesn't matter, because the software auto adapts to the order flows that's coming into the market. So if you set, say, an hour of, if you look back and you see on average, you got, you know, let's say if you're using 5-minute charts, you know, how many 5-minute candles in an hour, right? You got an hour divided by 5, you got 12 bars. So if you have a 20 period look back, you're almost at 2 hours of time. You're looking at the data over the last 2 hours of time. And you can set how big of a multiplier you want. If you want a really big multiplier, you want to really, really see where the real big players are coming in, you set that multiplier a bit bigger. And the reason this is important is because we're going to see the absorption. We're going to see the absorption come in, and I'm going to show you how to read this, because this is just an explanation. I'm going to show you how to use it so that you can really understand how to leverage this. Because the difference between big money and aggression is big money will step in at limit. Big money will step in at limit just as much as that market. So you can, a lot of times what you'll find is you'll see big money step in at the highs up here like this and absorb the buyers before a bunch of aggressive order flows start hitting on the market. So if you're a reversal trader, you're going to really rely on big money print. Big money print will always lead aggressive order flow. It's genius, and I'm going to explain how to see it. It's fantastic. One last thing we're going to do before we go on to the charts. Okay. And actually, before I teach you the strategies. Okay. Like I said, it's a boot camp. This is a boot camp. This is really, really important. So block trades. The same concept around big money print is the same concept around block trades. You cannot say, well, I'm just going to look at blocks over 20 shares or blocks over 20 contracts. You want to know why? Because an institution can take 100 contracts, splice it into 10 blocks. It's not important. They're just fading in on our contracts. The other thing too is that if you say, I want to look for block trades, 100 contracts. Okay, well, 100 contracts on the S&P is like a fly on the wall. 100 contracts on gold, and you're going to be like, whoa. Okay, so what we did, the same way we built an algorithm for big money, is we wanted to build an algorithm, and we did it, that looks at the top percentile of the blocks coming in over the last X period of data, because it's really dependent on the order book that's happening at that time, because you get different periods of time that has thinner, thick markets, right? The order book's going to have much bigger blocks at different times of the day, which means you need to have it based off of your periodicity, and you also need to have it based off your market. So what we do is we average out we look at the tape, we go into the time and sales, and we say, okay, I need to know the top 1% of big money blocks coming into the tape. And I need to see if they're coming in on the bid and the ask over X period of data in the depth of market. And so that's what we did here, because we needed to find a relationship so that you do not have the wrong settings for each market. When you apply this on the chart, you can now just use our software to tell you what to set your block trade settings at. Because what our software does, it actually tells you what to set your block settings at. Because nobody knows how to set your block trades. You're just randomizing numbers, which makes no sense. Now we built a tool that will tell you, you should be setting your block trades to this on crude oil. You should be setting your block trades to this, because that's really going to give you some power. It's going to give you power at the right time. How many of you guys are kind of excited about this? Give me a yes if this is it's new, man. Like, nobody's ever done it. It's cutting edge stuff. I'm telling you, I worked for months on this stuff. It's going to be awesome. And it's going to be awesome when you start timing these at levels. Okay, so let's go in here and let's talk about how to put this all together into some actionable strategies. Okay, so let's talk about, and then we're going to go on the charts and we're going to take a look at some examples and all of that fun stuff. How can order flow and volume help us? Well, first of all, we use order flow for entries. Order flow and volume can help us understand where the bigger traders are respecting the level that we're interested in getting involved in. Order flow can also help us improve the entries if we're deciding to take a trade at any given time. It helps us with some evidence, okay? Now, the other thing here is, the question is like, why should we consider using it? Okay, well, first of all, levels can actually fail. Levels can fail, so if you have an area of interest, it doesn't necessarily mean the market will follow through. And that way order flow can actually help you. Another thing too is, remember, levels are kind of like an area in the market. Like if you have an area of support or resistance, you know, if, like, I'll give you an example. Let's say I wanted to have a level of support, right? Prices are coming down, right? Sometimes price will come in front of it and react. Sometimes price will come below it and react. And sometimes price will react right on it. It's all the same level. All we're doing is we're looking inside the data to help us understand the relationship to it so that we can understand it in more context, so that it gives us better clues, okay, to look inside the information, okay? So the concept here is I wanted to give you a process on how to piece this information together. The last thing that anybody here needs is to use or purchase software or strategy systems that when they're by themselves at home after an event and they're like, man, that Sean guy, he talked about a lot of great stuff, but how do I use it to make money? Can we agree that that's a pretty important discussion? Thomas says yes, right? Features means nothing. Everybody can read a user manual. Everything looks good in hindsight. What about what happens next? Okay, so what I'm going to do is I'm going to teach you today how we're going to use this information at key levels of interest. Okay, actually, we're going to talk about that, Charles. Yes. And yes, we'll talk about that. I have a bunch of questions coming in, so if you can please stick around to the end, we're going to go over a lot of that. Okay, please. because some of those are great questions. We're going to go over that. So the first one, take notes. This is important. Highly important, guys. You guys are the first people in the entire trading community to see these slides. We have not released them in our community, not even our top level guys that are trading in our mastermind groups have seen this stuff. Okay? So take notes because this is really important. Absorption. This is the first time that we've ever talked about it since the inception of our company to the public, because the big money print now allows us to be able to do that. So what absorption does, the logic behind this is that we can use big money print to identify if larger volume is stepping in at both the bid and the ask at an area. This tells us that the big money volume is absorbing the orders in the book to stop the direction of price. So do you notice how the pattern, so these are support or resistance. So I've got a resistance level here, okay? Now this could be resistance on a trend, right? Let's say that level is a resistance. That could be a resistance on a trend, right? Going down like that. Or that could be just a resistance on a reversal. Either way, resistance is resistance. And what we're doing here is this is buyers buying up the market at the highs. This is sellers stepping in to absorb that. That is what absorption looks like. When you have absorption stepping in at an area of interest. Take a look down here. You've got sellers stepping in as prices are dropping. Buyers are coming up to absorb that and stop the market. Nowhere in there do you see aggression in the print, do you? I have it turned on. I didn't see it on the other candle. I have it turned on the right one. You can see that there's no aggression in there. So the question is, well, why did the market stop? Because volume can absorb the market on limit order execution. What if prices were coming down, and you've got big buyers sitting here with limit orders? Guess what that's going to do? It's going to mess up your delta, for one. And number two is, as prices drop into that level, it's just filling a bunch of buy orders, absorbing the sellers. But that's not aggression. You want to know why it's not aggression? Is because buyers are not going to the asking price. Sellers are coming to the limit price. If prices are coming down, that's not buyers going to the ask, that's sellers going to the bid. Hitting the limits, hitting the limits, hitting the limits, hitting the limits. Guess what? Boom, price is going to lift. And that's exactly what absorption tells us. That is what big money print is going to do for reversal trading, because you do not need to have aggression in the print for price to stop. We're going to show you on the pullback state on the S&P as they drop the market, how you could have timed your entries using big money on the reversal pivots. I'm going to show you this today, okay? Let's talk about the next one. This one's not a new concept, but I want you to understand what it is. Aggression is when buyers or sellers are aggressively attacking the opposing side of the market. So what happens with aggression? Aggression is market order execution. So whenever you think about aggression in the print, sellers are coming down, buyers aggressively start hitting the asking price of that candle. That is market order. That's why a lot of times if you didn't get in here and the market's lifting and you see the aggression coming, it's hard to get filled. It's because the market's leaving you behind. It's aggressively hitting the market. So that's why I call it aggression. I don't call it stacked imbalances, because I don't think that it's a proper term. I think that you need to understand what's causing the imbalance. Okay? Now, what I want you to understand about delta is that if you're going to use delta, make sure you use delta with other form of evidence. Because delta, if delta is being used only by itself, it's not very reliable. So the logic behind this is that if you're going to use that delta alone when price gets our ATI, it can be good for a quick glance, but the biggest downside is we never know if the delta is orders filled at the limit or at the market. And this can cause the order flow to show up on the opposing read of the data and throw the traders off. So if it didn't do this, it would be the holy grail of the market. But as a result, okay, as a result of this, we can combine delta with other information. Okay, we can combine this with other information. And that's why I think that if you're going to use delta, make sure you team it up with either big money print or team it up with aggression on the book. Okay, are you guys learning something from this? Give me a yes that this is that you guys are enjoying this today. A little bit of a breath of fresh air, a lot of stuff, a lot of new stuff. Okay, so what I'm going to do is I'm going to talk to you about something else. This is the hard part. Okay, this is the stuff that is going to make you think. This is going to make you think. It is complicated, Balaji. It is complicated. This is order flow, but our software is going to do all the heavy lifting for you. But I need to teach it to you first. You don't drive a Porsche with appreciation unless you know how good they built the engine. Right? But everybody knows under the hood's good, but they still, good enthusiasts can understand what they're driving. So what I want to do is I want to talk to you about something. Now I'm going to slow things down for this slide. Okay. Limit sell confirmation. Okay. Limit sell confirmation. And this is probably the most difficult thing that I had to learn as an order flow trader. In fact, I had to really think on this for a bit and understand it, and then to validate it, it makes complete sense. The logic behind this is that we can use order flow imbalances to identify if large imbalances in order flow is stepping in an area of interest by trading big limit orders, not aggression due to market orders. The big difference here is that the imbalance for limit orders are reversed to market orders. Okay, so at a resistance level, okay, we want to see sell limit on the ask, okay, which is the right side. Normally this would look like big buyers, but it's not. It's a sell limit, big traders waiting passively. Okay, and so this is what's interesting is that as the market's going up, the bid and the ask are rising. So like as the market's going up, the bid and the ask are rising. And if you got a limit order hit in here, okay, that doesn't necessarily mean, right? That doesn't actually mean that it's aggression, which is why delta throws off the readers. And this is also why sometimes you will get confused seeing aggression coming in at the highs and then it rips down. And this can't be, the only way to look at this would be to see the level 2 at that level. I think the only way to truly understand this would be to have the depth of market dome here. If prices are coming up, if you see really big orders sitting up in here, and then all of a sudden, boom, they're gone. And then all of a sudden this form looks like aggression. That's how I think you'll be able to see this. And the only software that I've seen do that is our inventory, and you need level 2 data. But it could be a serious advantage, especially as prices are coming down into reversal areas. So if you have the budget for level 2, might be something to test out for a month, because our software will allow us to do that. You could look at level 2 coming into areas of interest and see if you've got big resting limit orders above price. Yeah, anything that's running order flow will allow you to do that. You just need to pay for the data. Level 2 is level 2. All platforms have it, but it depends on how you want to see it on your charts, right? It's how you want to see it on your charts. Level 3 is better. Yeah. So let's talk about the last concept here. Okay. Same thing here. It's just the other side of it. Prices come down at the lows. And as prices are coming into the area of interest on the bottom, what may appear to be really big sellers coming in here could be limit orders getting hit. And then price rips up and then you get that big buying aggression in here. What I'd need to see here and what I really want to see, I really need to see, if I don't have any type of evidence in aggression coming in on the bar as it's coming in on that side, got to think here, right? I would want to see big money print step in here. Okay. And that's really where I want to spend my time, is taking a look at some big money print in here, because I really think it's going to be a big game changer for a lot of you guys that are looking to simplify this down. Let's go on to the charts. You guys ready to go take a look at some examples? I know that was a pretty heavy webinar so far. We've talked about some pretty awesome, but remember, this is an order flow and volume boot camp. And the purpose of these is to teach you stuff that has never been taught before. Got the S&P here. Okay. When I go into the charts, I can turn my software on. See, I don't have a level 2. See, I can turn it, says I do not have inventory data for depth of market. So I would need to turn that off, right? I can't show you the depth of market right now because I don't have the data. Any of your questions, guys, I'll answer them in a second. And we're going to go through the details here. So I'm going to go into the print. See, our software is very auto-dynamic. The reason we built our software like this is because a lot of traders don't want to look at order flow all day. They just want to look at it when it's needed. So we can come into the data here, and I can turn on the imbalances. I can see the data. Okay, so we can see the aggression in here. We can see the aggression. So let's just draw a line of support down here. Okay, let's just draw that. That's where the market stopped in here. Do you notice how there's just one random dot down here? That random white dot that's down there, that's limit orders getting hit. That's not aggressive sellers selling into support. That's limit orders getting hit. Okay, and that's hard to see that. And the reason it's hard to see that is most people are not sure when support's going to hold. Okay, most people are not sure when support's going to hold until they start to see this, because that's confirmation. Everybody thinks that aggression is going to confirm the area. Well, what is aggression? If prices are coming into the area, any buyers down here are passive. They're waiting for price to come to them. Once the market adopts a level, the entire market, okay, steps in and starts lifting the market aggressively. There's pros and cons to both. The pro of this is that you get in and you don't miss the trade. The downside to this is that unless you have some type of information to help you, you could risk the chance of getting stopped out at a level in which you're planning on taking a trade. The pro of getting in with order flow aggression is you get a little bit more confirmation that the market is actually following through at those levels. However, the downside to this is that a lot of times you're chasing the market, your risk and reward gets skewed, and you never sometimes get the fill. So let me kind of explain what I'd be looking for instead. And I don't know if it's on here or not, because I don't know if this is an area where they did step in or not. But I'm going to turn off the bid-ask imbalances. I'm going to turn on some big money trades here. There they are. There's 2 levels of big money print that stepped in here. Prices are coming down. Prices coming down in here. This is big money. Big money stepping in at the lows in here. Okay. You'll also notice that if I turn on the bid-ask imbalances, there's no aggression in there. So when the big money stepped in at the lows, what that meant was as the sellers are driving down, the buyers stepped in to absorb that. okay? You notice how big money started stepping in before any aggression happened? They came in to test it for support. Remember, this is a downtrend, so we're going to stop. You notice how there's no aggression in here? The market's not yet complete. They came back down, no aggression. There's no market orders getting hit. What happened at the lows of this candle before the aggression stepped in? At the lows of this candle, absorption happened. And absorption will always happen before aggression, okay? Before aggression happens. That's a good question, Thomas. No, not if you have the candles turned like that. Thank you, Mr. Programmers. It has to do with auto adjusting on the print. It has to do with the candles. You can make it wider. Okay, right? We've pushed the limits with Ninja Graphics because, as you can tell, our order flow software is much different than a lot of order flows tools out there because we design custom tools to make it flexible. Big BMI is probably big money indication, right? Thomas is probably just asking that. So let me kind of talk a little bit about the downtrend here for a second. Okay, let's talk about the downtrend. I'm going to turn off some stuff in here. And let's go to turn off the dots. Okay, this market was selling off. Okay, so the market was selling off. Give me a sec here. I'm just going to make the width of the candles a little bit bigger so you can see it. So as the market sold off in here, I want to kind of pay attention to what was happening on the pullbacks. Okay, so this is a pullback. And I'm teaching a concept here, so you can apply it to any market you want or any strategy or any type of trader that you are. But the S&P is dropping. Okay, there's an impulse move. And when we get a pullback, what do you think is the most important thing to start seeing in the pullbacks? Big money stepping in at the highs. Okay, if you take a look at what happened on this pullback here, now this is a day trade time frame, this is a 3-minute chart, but it's still when big money steps in at the highs, not the middle of the bar. Okay, at the highs of the candle. Okay, it's when the sellers are stepping in to meet the buyers and absorb that order flow. They drop the market. That's a trend trade right there. Okay. When they come back at it again for a retest of this, what happened at the highs up here? Right at the top. Right in here, they come in, they drop the market. Boom. Now we're talking from here down, they drop the market down to the lows here. Now, if we go back up again, one more pullback, what happened up here? Big money stepped in at the highs. No buyers came in up there. You see that? No buyers came in at the top. And our software is adapting. You can set this, you can just go in here to the average big money blocks. Right now, it's telling me that over the last 20 bars, the average bid and the average ask is about 230 contracts. So I could make this software even more responsive. I could set those settings to be a 5 multiplier, a 10 multiplier. Okay. And the key here is that you can see that we can set this however you choose. So I've got it set over 20 bars with a 2.5 multiplier. You might want to set it over 50 bars with a 10 multiplier, and you might only get a couple of those big money dots come on your chart, but when they do, they rip it, right? And this is a pullback that came in on this downtrend. You can see they come in at the highs and they drop the market. Okay, there's also a reversal bar, yes, as well, Cesar, but the point of the concept is to see the relationship of that order flow, okay, on the pullback. If I go into the euro, okay, and we look at this trend down here, let's go and just take a look at this trend. Let's go and turn this stuff on here. Okay, we can see as the market stopped down here. Look at the absorption at the support level. Now, I'm going to just turn the dots on for a second. This is 4x. So this is 4x. Okay. I'm going to turn off the candles just like that. We're going to make it a little bit wider. Okay. So you can look at the numbers here if you choose to. It's just a preference if you want to see the numbers. It's really a preference of charting. So I want to just kind of talk about what's happening in here. As the sellers are coming down into the support level, look at the buyers meeting the absorption. You see it? This happened before the rotation started. They came in here. The big money stepped in on these candles on these lows before this market lifted. And there was no aggression in the follow through. There was no aggression in the follow through in here. Do you see that? So that's why I think that you need to understand that big money is always going to trump aggression. Big money's always going to trump aggression, hands down. And that's why I wanted to build it, is because everybody out there is talking about aggression, and aggression is late to the party. Look at the top up here. What did you see up here? There's no buyers up here with any significant nature. Do you see any type of buying up there? You got aggression coming in at the top. Look at this. You got aggression coming in at market. Big money stepped in here before the aggression followed through. But what's interesting about this, what I really like about this, is that you have big money and aggression at the same time. Now, remember what I said about looking for clues? Take a look here. Big money steps in before the aggression happens. Why do you think this would be important? Why do you think it would be important for us to have that as a trader? Timing is everything. Yes. Reversals, absolutely. Being able to see what's about to happen before it happens. And I think that's what really provides the edge here. Everybody can see the breakouts. Everybody can see when price breaks out, you get all this aggression, you get all that stuff, right? But what ends up happening is, I'll give you an example. Let's say I had a support level here, and I had a support level here. And as the market was coming down into my areas of interest, blindly having an order in here, okay, blindly having an order just sitting there is very dangerous. Because you're going against trend, you're going against structure, you're fading a market. Reversal traders will always take a little bit more aggression than trend traders, right? So if I can see, okay, that these guys are coming in and then the buyers are stepping in here on the right-hand side of this candle, right there, then guess what? That is when I would put my order in, when I seen that happen. I would not be putting it in as this was coming down. I would not be putting it in as they're overshooting it. I would be putting it in as soon as this started to happen, because that's when I can start to see the absorption taking place in the market. And then you can see where the buying starts to actually take place. You kind of understand that, guys? Is that kind of making a little bit more sense? So I built this. Raymond says no. That's okay. So for those of you that did not get here at the beginning of the presentation, we talked about what aggression is and what big money is and stuff. So if you have questions on that, we'll talk about it in a second, guys. Okay. So if you're a trend trader, you're trading with the market. If you're a reversal trader, you're trading against the market. The key here is that you're always going to have a absorption and aggression seems to be the best reversal, Spike says. They come hand in hand. If the market's going to give us follow through, okay, if the market's going to give us follow through, okay, in these areas here, okay, you can see that there was no aggression here. I'd be concerned about that. I'd be concerned about that because what's happening here is that this is most likely going to be a smaller trade because there's no aggression coming out of that big money print. So the market's not really stepping in and be like, oh, okay, we're going to hit it. Because when the market hits it, it hits it, right? Like that's the entire market. And that's where like there's bigger traders that are stepping in saying, okay, this is where we're going to hold the market, right? But if the market doesn't come with aggression, then you need to understand what that's telling you, right? So if the market's not coming in with aggression, watch what happens. They come back down. Then there's some aggression here. Okay, there's some aggression here. We get a little bit more of a lift. Okay, see how that happens? When they come in down here, where did the aggression happen? Later. But this move started here. And where did they come back to test? Right where the buyers were. Most people are going to try to say, oh, we got, what's interesting about this is that we track this the same way that we track time and sales. We track this pattern in here because it's confirmed aggression that is much larger than the opposing side of the print. This, we track this by taking all of these numbers and averaging out the average ask and the average bid and telling ourselves that this is big money. We can come up here and right now and say that right now big money orders, the average bid and the average ask on the S&P is 230 contracts. So if I have any orders that are 2.5 times 230, which is 2.5, if you notice how these are all like 600, 500, 800, 600, you're never going to memorize that if you're a retail trader. You can't. You can't do the math. It's impossible. You need an algorithm to do that. You need a computer to do that for you, right? And that's what we've built. We've built a computer plug-in for this that basically goes into our software that does all the math for us, which tells us the average block size, the average order size. Now, let's talk about one last thing here. Okay, we're going to talk about something new. Okay, turning off all the print, turning off all the dots. Now, what I want to do is I want to talk about block trades. Right now, okay, one of the biggest misused assets in our space is block trades. If you've ever heard of tape readers, traders that are reading the tape, they're looking for block trades. Right now, I can see the bigger blocks. There was an order at 34 down here. That's starting to get a bit bigger. Yeah. 14, 16, that's nothing. It's a dust speck on the wall. It's the S&P, right? We're looking at the S&P here. So what we're doing here is we're saying that right now, over the past 50 bars, 53-minute candles, that's 150 minutes. It's 2 hours. Yeah, well, that's the whole point, Thomas. Right now, this is the S&P. So over the last 2 hours, the top 1% of big block trades were about 50 contracts. He says average is 49. So right now our software is going to tell you that you should be going in here into the settings, okay? And you need to go in and you need to set your block trades. We'll find it here. Bear with me. This is a pretty heavy application. Here it is. Right here, we set to 50 contracts. Dynamic block chart size bars, look back, 50 bars, okay. Block trade size, 75. So right now, if I want to have anything that is that's bigger than the average right now, I could set it to 50, I could set it to 75, I could set it to 100, which is going to be big blocks. So I have it set to 75, which is 25% larger than the average right now, which means if anything that, if an order comes in of 75 contracts, then it's pretty significant, okay? So let's go and turn the block trades on for a second. Now, I would look at this and I would say that's a little bit noisy. Remember, 50 is the average, 75 is not too big. I would come in here, maybe try to go in and put this just a little bit larger to potentially maybe 100, just because it's 2 times the average. I would set this to 100. And what this is now telling me is that I'm 2 times the average. Give it a second to load the data. There. So I want to basically explain this. You can see when big money is getting involved. These are big blocks coming in at 100. What happened here on the pullback? We had 2 block trades come in, and I got it set to red. What happened here on the pullback? Remember, this was news. This is inventory. Okay. I see tons of questions, guys. I'll spend time after in a second going over them. It's too much for me to explain. What do you see here? Pullback, 2 large block trades on the top of that pullback. Pullback, 2 large block trades with a huge block trade follow through. These are really, really, really big deals. So let me kind of explain this. The direction of this market is down. I would be looking at trying to ascertain the sellers. Now, we're not trading into an inventory report, so this is all 3 minutes going into an inventory report. Today was 11 o'clock. Okay. But what you can see here is you can see that after the news cleared, price started to trade down, pull back, big sell-off, pull down, big sell-off. But that's because we're able to see that this is significantly large block trades coming in here. Now let's talk a little bit about some added punch in the, let's put a little bit of brandy in the punch. See this little pink thing here? I have it smaller. I'll make the candles a bit wider. This is really fun, guys, because now what we're doing is we're saying, huh, we got some big blocks coming in with some big money at the top. What happened on the next bar? Slam. What happened on this bar? It's an up candle. Big sell blocks coming in on that bar, man. Big sell blocks. What happened here? Big sell block came in at the top of that bar. What happened after that? The only way you would set this properly is if you knew how to dynamically read that 50 is the average. I have it 2 times the average block size. If I want to look at this on crude oil, it would be a completely different read because crude oil is going to have different averages in the tape. So you would need to set your blocks to the markets that you're trading, which is genius. Because now because what we're doing is we're actually going into the time and sales, and we're going in and we're looking at all that tape to see what has been the biggest blocks that are moving the market. And that's the thing. We're going in and we're actually saying like that in this time and sales here, over the past 2 hours, we've been able to take all of the data that's come in here and tell us that we should be setting these above 50 contracts because 50 is the bigger blocks. So if we set it to 100, these are massive blocks. You understand where I'm going with this? You could be maybe taking a trade going along here and you see a big sell block come in here. It will say, I'm not going to take that trade. What if you were trying to get long in here and you've seen that step in? The hell with that, man. I'm out. You know what I mean? Like that's the key. You could maybe try to catch this long on a bounce trade, and then you see that at the highs like that, and you're like, wait a second, I'm gone. No. Moving stop to break even. You know what I'm saying? That's the fun part about this, is you can take the data, you can set it up however you choose to. We've got detailed training manuals on this, and our product specialist, Jeff, and our guys can easily help you make use of these tools and get you squared away on this stuff, right? And that's the whole point. I'm going to take a second now. I want to read some questions. I'm going to read some questions, so bear with me here for a second, guys. Okay, I'm going to go up here. I'm going down here. Just bear with me, guys. Robbie says, I've always wondered how you reliably know what the large block size is for the market. This is brilliant. Thanks. So Michael is saying, is it possible for us to take these signals and automate them? Yes. Next week when we release the easy algo. Yes, we are able to read chart markers. We can automate the chart markers. You can't automate big money because big money is not a chart marker. We could probably make it work though. I could probably make our programmers code that, right? We can do chart markers. We can plug in any indicators that read that. Yes, and you can do it with Forex. This is similar to iceberg detection. Yes, with the big money it is. Block trades too. If we're going in and we're detecting the big blocks. Yes. So bear with me, guys. I'm going down. I do see questions, so trust me, I'll get to them. There's a lot of comments. I'm just looking for questions. What is the difference between big money and aggression? Big money is absorption, and aggression is order flow execution on the bid and the ask. So we talked about it the earlier part of the webinar. If you were late to that, just watch the recording. We go into detail on that. Okay. This is a 1 hour chart, any shorter time frame? No, this was a 3-minute chart. That's a 3-minute chart. So I believe someone said, Jean said this is a 1 minute, this is an hour chart. No, that's a 3-minute chart. That's a pretty short time frame. It works on stocks, futures, and Forex, as long as you have data. Brian says, can you add a button in the menu at the top of the chart that when clicked aligns indicator with block trades? Can you send an email, Brian? That might just be a feature we could just add into the toggle. Yeah, and then we could just recalculate. That might be super. Yeah, that might be actually a pretty good. Any feature request like that, just send it in and we look at adding them in the dev queue. Brian, Mr. Brian B, back in the day, he's one of our longest customers. Shout out to you and your family, brother. Hope you guys are doing well. Thomas Long, B might getting run over. Okay, so what if the institutions break up their orders into smaller lot sizes? Yeah, but that's the whole point, is that we're detecting when they don't. Block sizes can be done. You can do that. We're detecting when they don't. So we're trying to detect when they're like, the hell with it. We're going in with big money. Okay. MJ says, can the print and the bars of the print profiler show sequential decline in the buying and selling similar to the NOFT order flow sequence tracker? Yes, that's the trap traders. Yeah. Yeah, that's the trap traders. The only difference is we integrate the trap traders with delta divergence, and we also integrate the trap traders with combined signals. So it's not just a standalone. We have 3 different signal sets. So if you go into the print, you've got trap trader, delta divergence, combined signal, and now big money print plus block trades. All of these are serious signals. These are all signals that you can basically turn on and detections. Okay. So Rich is saying, so what is aggression? Aggression is order flow execution. Aggression is when we go and we turn on the print. We go bid ask and balance dots on. Aggression is these dots that are coming in, which is supply and demand. So let's go back up here so you guys can understand this. Aggression is the dots or the highlighted print, which basically creates levels of supply and demand in the market. Okay. And if we go down to big money print Big money print is where we have levels that are basically much larger than the average ask or the average bid. So we're not looking at aggressive order flow. This could be limit or market. It just means it's above average volume. It's a volume detection, and that's absorbing the market. And then the block trades are when we can go in and we can take the average size of the top largest order flow and we can ascertain it so that we can tell ourselves, you should be setting the NASDAQ to 30 blocks, or you should be setting the S&P to 50 or plus blocks. Because if you try to set them like to 20 or 30, or it's completely random and it's just subjective, and there's no time for subjectivity in this, right? So I really hope you guys enjoyed today's event. Give me a yes that you learned something. Okay. Did you learn something today? That's the message. Is if I could deliver some guidance here. So what I want to do, guys, is I want to let you know that the main tool that we're using, oh yeah, it's definitely worth watching again. And I think what I'll do is I'll put this video in the download page as well for anybody that purchases the software, because I think that you're going to want to have this as an insight video as well. I want to just quickly talk about the product for a second. And I want to talk about what it is and what it's designed to do. So the print profiler involves two sections, an order flow section and a volume section. Today we covered some of the order flow. We did not cover all of the order flow features. We did not cover delta divergence. We did not cover the heat map. We did not cover any of that other stuff that is in some of the other training videos that we talk about. There's just a lot of stuff that the software can do, right? There's like, they've got a heat map for delta. I mean, we've got tons and tons of stuff that you can use to your advantage in here. But the concept is that you can use the tool the way that is best for the way you're trading. If you're levels trading, trend trading, etc. Now, when we go into this, today we covered print, we covered inventory, we covered all of the block sizes and all of this stuff here, okay? We can turn on the delta divergence signals here, or the delta print signals as well. It can look like a freaking rainbow if you turned it all on. It's not necessary, but the concept here is we covered pretty much the most important stuff of the order flow components today, right? What we're going to do tomorrow is we're going to be covering all of the profiling stuff, which is ultimately over here in the volume section. We're going to talk about volume profile. We're going to talk about developing profiles, all of the different stuff with regards to developing, this is for back testing volume. We got a lot of stuff here that we're going to talk about, but that's tomorrow, guys. And if you're interested in using this tool, okay, this tool is hands down the largest sold product in our company. And there's a reason for it, because it can be used with every single indicator or system that you trade with, because it can be used as standalone trading systems, or it can be used as confirmation tools. And today, it really just depends on how you want to trade with it. But it can really, really get you out of harm's way. Like if I were to say, what is this going to do for you? It can save your business. It can save you, because it can tell you when you should and shouldn't be getting in and getting out with confirmation, right? Hands down, okay? So a couple things I want to do is I want to give you an opportunity to save some serious dineros here. We're running a promotion. And if you'd like to get your hands on the order flow software, what we'll do is I'll give you the pricing now. Remember, all of the volume software components tomorrow, we're going to train you on the volume tomorrow. But if you guys want to get using the order flow and you want to start, taking a look at this stuff and you want to start getting it on your charts and getting you set up, hands down, we can set you up. We can do an install with you. Normally what we do is we price this at $19.95. This is a Ferrari, right? This is truly a Ferrari. It's not just a basic tool. Okay, and what it's designed to do is just what we did and a whole lot more, right? So normally we charge $19.95 for this. We're going to drop $1,000 off the offer. Plus, as a result of this boot camp or this special 2-day event, we're going to waive the maintenance fee. We're not going to charge maintenance fees on your purchase. Okay, so the promotion ends Monday. Tomorrow's webinar will be on the volume component, okay? Tomorrow's webinar will be on the volume component, and I'm going to put a link in here, guys, so that you guys can take advantage of this if you guys are interested in this, okay? And let's just put that in here. There we go. Perfect. So it does come with 2 licenses, so you can use it on 2 computers. It's got a detailed user documentation, very detailed, okay? It's got training videos, plus I'm going to put this video in there as well. I'll get Ash, or we'll just put it on YouTube. You guys can watch it on YouTube, right? And it is for Ninja 8. Okay, it's designed for Ninja 8. Now I know we got questions. Will you design it for Sierra charts? We design it. The answer is probably not no. There's a reason why we can only build certain things on certain platforms. Like I use other platforms for equities, and there's other platforms for scanning stocks, and there's other platforms. But this is a tool that is really pushing the limits on pretty much every platform out there. And the reason for it is we've done some significant things with that cannot be done on other platforms. Now, other platforms do have order flow and they do have volume, but not at this level. No way. Not with the quantitative pulls that we're pulling in, and not the stuff that we're doing in the math behind the scenes with the order flow and the volume and the tape, and not a chance. Because if it was built already, I would have been just using that and have to build my own, right? So I'm going to open the door up for questions. Okay, Robbie says this is the sale of the century. It's a pretty good deal. We're dropping some pretty good deals here, guys. People like to save money, right? And it's a pretty good sale. So Spike says, I own it. I will never trade without it. It is one of the most important pieces of software that I own. Yes. Can it be used in running a strategy? So that's a good question, Jacob. Right now, the only thing that we've done is we have chart markers for our signals. So basically, next week we're going to be launching the all new. We're going to be tying in the Easy Algo for running automation on that. So we will be doing an automation webinar next week when we launch the Easy Algo. If anybody here wants to automate some of these trade signals and automate their signals on their charts, as long as you can produce chart markers on your Easy Algo, no, the Easy Algo is not included. Good try, guys. The Easy Algo is a trade execution platform. But if you want to know more about automation, come to next week's event, because we'll be demonstrating it on the print profiler as well. Okay, so let me kind of go over the questions here. Is we have a trader saying, any chance I could tie in the trading room access to this offer? If you want access to our trading room, okay, I'll do this. If anybody in here buys the Easy Algo, or excuse me, the print profiler today, and you want to get this going, I'll throw in a free month in our trading room. I'll give you access to a month in our classrooms, and that wasn't planned by Ashley, and probably it'll cause a little bit of a mix-up on the back end. But if anybody here wants to buy the print profiler today, I'll work with Jeff and I'll get everybody going here so that we can get you free access to our back end classrooms for the next month, right? So I'm giving you guys a discount on the trade room and all that stuff. I'm just trying to help you guys out where I can, try to pay it forward where I can, guys. What I'm going to do is I'm going to run a poll, okay? Anybody in here that would like to, get in touch with us if you have questions, just fill this out, please, so we can help you. And if anybody has questions on the software specifically, if you want to get in touch with us, or if you have questions on the discounts, or if you have questions on, if you have questions on, how to get set up and on the installs, and if you have questions on, if you want to get it now, can I get the trade room for free for a while and all that stuff, just shoot us a contact. But remember, if you want to get the trade room for free, you'll need to purchase the software today, because that wasn't planned in the deal. And I'm just giving away freebies now, helping you guys out. Okay. And we're cutting giving you $1,000 off. Like this is a Ferrari. So are block trades good for trail stops? You could. Yeah, you could definitely do that, Brian. How many of you guys are using the print profiler now? Just type a yes in the chat box and make sure that you're put to all panelists and attendees. I want to make sure that everybody in here can see that you're using it. These are customers that are coming here to learn more about this stuff, right? Like, just the reason, we've got a lot of traders in here that live and die by this tool, man. Like It's a really, really fantastic tool. And I really just think it's meant for so many great reasons. So the big thing for me is the big money print and the block trade algorithms. I really think that if you own it and you need to update it, get in touch with support at nstradingacademy.com, guys. We'll get you set up. We can do an install too. Anybody here that, here's a link, guys. Don't forget to add the coupon codes and stuff like that. We're waiving the maintenance fee. We're giving you $1,000 off. Plus, I'll waive a month of the trade room for free, right? If you buy today, right? So, we'll give you a month of our trade room. Come trade with me live in it. Okay. Plus, we can do the installations and all that stuff. If you need help with that, just let us know. And if anybody here owns the print profiler and needs help with that, just let us know. We'll get you set up. Not sure what any DDE is, but maybe you could break that down there, Robbie. I'm going to leave the poll up here for a couple more seconds. If you need help or you need assistance or you're ready to buy, you need the links and stuff, just put it in the chat box or put it in that. Okay. Details about the algo. All I can say is that we held off on the launch for 6 months because I put Jeff through super testing on that. We were going to launch that 6 months ago, and I made sure that our team spent more time testing the order execution, testing to make sure that all the features work, because it's order execution, and it's better to do it right than not do it at all. COVID ready, baby. Guys, I'm going to shut the poll down here. For those of you that said yes, excellent, we'll send you the links. Those who said no, I'm assuming you're customers already, or I just need to help you a little bit more in the next event. So, guys, one last thing. It's a 2-day boot camp. Did you guys enjoy day 1? Yeah, so let me just show here. So Evis says, is this the same software that splits the auctions? No, that's the print profiler. The print profiler is a completely different tool. Yeah, but it is definitely the most important tool in our company. That and the Orderflow are the 2 biggest sellers. Okay. So Sri says, I'm completely new to trading and tools. I guess, as you said, is a Ferrari. I'm not sure it'll be able to drive. Well, you know what, Sri? That's why I've got Jeff and I've got Gilbert to help you know how to put the keys in the engine and how to put the clutch down to the floor. We'll get you set up, buddy. If you're completely new to trading in here and you're like, whoa, what are these guys talking about? Can you guys just do me a favor and shoot an email to support and say, I'm a newbie. And Sean said to kind of like get in touch with us, because we've got an onboarding specialist, Gilbert, and we've got, Jeff and the guys. We will be more than happy to get you set up on the platforms, more than happy to give you a deep dive of all the tools and know which ones are the most important ones and which ones you can just kind of wait till later if you're interested. Like, we've got over 40 indicators in our company, but there's about 10 top sellers that are the big boys that everybody uses. This is one of the big boys and probably is the biggest boy, right? Yeah, we'll get you through the weeds there, guys. Anybody that's new in here, you're in the right place, man. I wish I had mentors like we provide when I started, man. There was a lot of weeds back in the day. Right? We're going to be doing volume profile only tomorrow. So this software, just to remember, guys, this software has an order flow component, and then there's a volume component. So there's a volume profile component to this software too. This is not the auction. This is completely volume only. And this is really a really sophisticated tool. The big one here is going to be manual profiles. We're going to be talking about manual drawing of auction profiles tomorrow. But remember, today was order flow. Tomorrow is volume. Okay, guys? So tomorrow we're going to cover macro and micro volume studies, cluster analysis, volume cluster pattern reversals, cluster averages, volume divergence, composite profiles, and I'm going to be giving you a strategy on volume divergence. And this strategy is so freaking wicked. I had one of our traders send me screenshots of his testing because I taught it to him on 30-minute candles. He's like, I'm going to do that on smaller time frames. So he brought it down to smaller time frames. And he sent me his test results. He's like, man, like I'm onto something big here, really big. And I said, yeah, I'm telling you, the volume divergence is amazing. It's really amazing. Right. So, guys, I'm looking forward to sharing all that stuff with you. If you've already registered for today, you're automatically signed up. Just make sure you check your email for the link tomorrow. Okay. And just give me a yes if I did my duty and I impressed a little bit today. You know, it was a good event. You guys enjoy that? I'm going to put the link in here, and there's a link there. Don't forget to take that link and save that. Remember, if you want the free trade room with your purchase, you got to get it today. For those of you who need assistance, we got your polls. And guys, I'm going to break for some food. I think I've earned it. Guys, enjoy the rest of your day, and we will be bright and we'll be ready to go tomorrow, guys. Take care and happy trading. On behalf of Neuro Street, we thank you for your attendance, and we will see you tomorrow.